Internal Revenue Service IRS tax news. IRS deadline to return distributions to retirement accounts is August 31st. IR 2020-187, August 24th, 2020, Washington. The Internal Revenue Service today reminds IRA owners, beneficiaries, or workplace retirement plan participants who received a required minimum distribution, an RMD, this year that they have until August 31st to roll over or repay the distribution to avoid paying taxes. So let's just kind of recap where we stand here with the IRAs. The IRAs are going to be something that we put money into, or a plan, a retirement plan with a work like a 401k or a 403b. The reason we're going to put money into the retirement plan isn't just so that we can save for retirement, because we can put that in any kind of type of plan like stocks and bonds, but to get the tax benefit that you typically get when you put the money into the retirement plan. So that means that it typically will lower basically your taxable income, which will lower your taxes at the point in time that you put the money into the retirement account. But then they put restrictions on the retirement account until you pull the money out. So you can't really pull the money out until you reach the age of retirement. And at that point, they actually require you oftentimes to take the money out, because they want to, it's a tax deferral. So when you take the money out, then they're going to charge you taxes at that point in time. If you take the money out early, then they charge you a penalty for taking it out early, unless you have some circumstance that will waive the penalty, and you got to include it in taxes. So that means if you have a required minimum distribution, then you have reached the age that you're required to take the money out. You're required to take the money out of the IRA or the retirement plan. Why would the government force you to take the money out? Because it's a tax deferral, and they want you to make you take the money out at some point because they want to charge you the tax. They're going to count it as income, in other words, when you take the money out, and at that point they get to take some of it. That's when they charge the taxes on it. So because of all this going on at this point in time, they said that if you take the required minimum distribution, or if you have a required minimum distribution, you can actually, in some circumstances, roll it back over into another IRA that's also within the same kind of restrictions. So you put it back in, or to a retirement plan, or put it back into the same plan, and that way you can avoid having to pull the money out at this point in time. And if you can avoid having to pull the money out, then you don't have to pay the taxes on the income that would result from taking money out of the IRA due to the minimum distribution. Okay, back to the text. The Coronavirus Aid, Relief, and Economic Security, or CARES Act, waived the required minimum distributions during 2020 for IRAs and retirement plans, including beneficiaries with inherited accounts. So because of what's going on here, they put a law in saying they're going to waive or not require the minimum distributions. Okay, so then the waiver includes required minimum distributions for individuals who reached age 70 and a half. That's usually the age at which they're going to start making you take money out of the account, whether you need it or not, so that they can charge you taxes on it. In 2019, and took their first required minimum distribution in 2020. Roth IRAs, there's a link to Roth IRAs here, don't require withdrawals until after the death of the owner. Why is that? Because the Roth IRA is kind of the reverse of what typically happens. You get taxed when you put the money in, and not taxed basically generally when you take the money out at the other side. So that's going to be the more kind of unusual IRA. You got the traditional kind of retirement plans where you get the tax benefit up front. The Roth plan where you pay the tax up front, but then you get to not be taxed on it at the point in time that you take the money out. All right. Individuals who took the required minimum distributions in 2020, including those turned 70 and a half during 2019, have the option of returning the distribution to their account or other qualified plan. So if you're saying, hey, there's a waiver right here, I don't need the money, and I still got the required minimum distribution, which I don't need to take the money out. If you don't need the money, then you might want to take that money and put it back into some other type of IRA that's still under the kind of IRA or retirement plan window, or back into the same plan, so that you don't get charged the required minimum distribution, and may be able to save some taxes by not pulling the money out yet. Since the required minimum distribution rule is suspended, required minimum distributions taken in 2020 are considered eligible for rollover. Therefore, required minimum distributions can be rolled over to another IRA, another qualified retirement plan, or returned to the original plan by August 31st to avoid paying taxes on the distribution. And so the general concept, as I interpret it under that, would be that, okay, if you took money out of the required of a retirement plan, then you usually have the option to roll it over or something, which they call it, if you put it into like another retirement plan, which is under the same kind of restrictions, meaning if you take it out before retirement, they charge you taxes or penalties. So since the required minimum distribution is now not required, it was waived, then you can possibly treat it more kind of like a rollover. So if you took the money out, then you can put it back into the same retirement plan, just as if you didn't take it out, so it's back under the umbrella. Or you can put it basically into another retirement plan that has the same kind of effect. So if it would be easier then to open up an IRA, for example, then you may be able to take that option and treat it as a rollover, which would be a non-taxable event. So back to the text, IRS Notice 2020-51 PDF. Also, just as we go through these things, this is good. If you got a required minimum distribution and you're questioning whether you want to keep it or if you want to put it back in or something like that, you might want to, of course, you want to talk to your tax professional about it, get some advice on it. So IRS Notice 2020-51, there's a link to that here, also provides that one rollover per 12-month period limitation and the restriction on rollovers to inherited IRAs don't apply to this repayment. So because of this weird circumstances here, they're not going to remove your ability to have other rollovers. In essence, not going to cut into the restricted amount of rollovers you can have per period. So the CARES Act provision applied to most retirement plans, including traditional IRAs, SEPs, SEPs, IRAs, simple IRAs, 401k plans, 403b plans, 457b plans, profit sharing plans, and other defined contribution plans. So all of these kind of plans are kind of under the same type of umbrella, in that when you put money into them as the employee, in essence, then you're getting a benefit at the point in time you put them in, and then you're getting that kind of umbrella. It just depends on what kind of business you're in. If you have a large 401k plan for a business, a company, those are typically have more, different benefits related to it. Smaller companies might have a simple IRA. If you don't have a plan with the company, you might have a traditional IRA. If you work for the government or something, you might have a 403b or something like that. So the required minimum distribution doesn't apply to qualified defined benefit plans. Where can I find more information? More information on the CARES Act and retirement plans, including FAQs, frequently asked questions, can be found on the Coronavirus-Related Relief for Retirement Plans and IRS Questions and Answers page. There's a link to that here. There'll be a link to this in the description.